Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. Thanks for joining me today. We're talking gold today. Should I invest in physical gold to hedge against disaster? So gold is an interesting thing. So when financial uncertainty is happening, which is pretty much all the time, but we pretend like it's unique, many people ask, should I invest in physical gold? Gold has often been used as or viewed, I should say, as a store of value and a hedge against inflation or economic crisis. But when it comes to true disaster preparedness, like natural disasters or infrastructure breakdowns or system-wide economic failure, is gold the right asset to hold? So we'll explore kind of when physical gold might be useful, what history teaches us about economic disruptions, and how essential goods might often be preferable compared to gold or precious metals when it comes to the real world and real world emergencies. So let's talk about gold as a hedge, what it offers, what it doesn't. So physical gold, unlike stocks or cash, isn't dependent on digital infrastructure. So in theory, it can retain value even when banks close, markets freeze, or currencies lose credibility. And this can make it appealing in certain scenarios, such as geopolitical instability, currency devaluation, widespread inflation, or financial system breakdowns. In 2025, for example, gold prices have gone above $3,000 per ounce, possibly based on fears of inflation and market volatility. And financial analysts have revised their targets upward. And gold ETFs have seen significant inflows. So the investor demand for safe haven assets is still pretty strong. People kind of run to gold, for example, when they feel fearful. However, there's some difference of opinion. Warren Buffett, for example, has famously avoided gold throughout his entire career. And his reason is that gold doesn't produce anything. It doesn't generate earnings, dividends, or interest. In fact, Buffett once wrote, "Gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility." End quote. So instead, Warren Buffett, for example, invests in productive businesses that generate real economic output. From his standpoint, gold is an asset that just sits idle while investments compound over time. And he's not alone. A lot of financial planners, including myself, caution people against relying too heavily on gold as a long-term investment, partially based on the fact that it often underperforms equities and produces no income. So when might gold make sense? So to be fair, gold isn't completely without merit or utility. In a scenario where global monetary systems reset or the dollar collapses due to hyperinflation, physical gold could provide some purchasing power in a way that cash can't. If the power grid goes down and digital payment systems fail, gold, especially if it's in small denominations, might be traded as an informal currency. But that's a very specific scenario, and it assumes that people and systems will still accept gold in trade. But how does that hold up in the real world? For example, during natural disasters, which is kind of the question we're asking, is what if something happens that disrupts our society, our culture, our infrastructure, our basic operations of our life, for example. So there are some examples in history where natural disasters occurred and everyday economic activity was impacted. It was disrupted. And what people use in those situations tells us a lot more about gold and whether it's the best asset to have on hand. So one example is Hurricane Maria in Puerto Rico in 2017. When Hurricane Maria hit Puerto Rico, the island's power grid was disrupted, communications failed, banks closed, and then for weeks or longer, actually, people had no access to digital payments or ATMs. So how'd they get by? They bartered, in part. Essentials like bottled water, canned food, fuel, batteries, and generators all became currency. In some cases, medications were exchanged between families and communities. Local commerce was driven by necessity, not by monetary value. Gold really didn't play a part. I'm not saying that people didn't use gold here and there for trading, but in general, bartering was done with essential goods, things with practical utility that were immediate needs. Also, what about Hurricane Katrina in New Orleans in 2005? After Hurricane Katrina, flooding shut down infrastructure, gas stations closed, people traded fuel from portable tanks. People used food, diapers, hygiene items, clean water. All those things became bartering tools. Some people offered labor or rides in exchange for meals or shelter. Gold wasn't really a major factor. The economy didn't need wealth preservation, it needed survival tools. So, what are some lessons from these disasters that we can take away? So, the consistent theme is that immediate use items outperform traditional stores of value. People need immediate use items. Sometimes cash can become useful if payment systems are down. So, in places where digital systems are down and not functioning, cash can be useful. I mean, gold might still have some theoretical purchasing power, but it's hasn't been likely to be accepted or traded as much as even cash. So, what do people truly need, and what will they really use as currency? Again, food and clean water, medical supplies and medications, fuel and power sources like generators, batteries, solar chargers, hygiene and sanitation items, shelter and safety tools. All of these essential items become more valuable typically than gold in disaster scenarios. They're assets that support survival, and they're also tradable in a barter-based microeconomy, as we've discussed. So, where does gold fit in emergency planning? Should you just dismiss gold entirely? I'm not saying that, not necessarily. Gold can play a role in long-term preparedness, especially in scenarios where the economy doesn't collapse completely but suffers significant shocks. So, if inflation erodes the dollar, gold could help preserve purchasing power. In a slow recovery, gold might serve as a secondary asset once systems start to rebuild. So for this reason, a small allocation to gold could be reasonable, anywhere from 5 to 15% of your total portfolio. Could be reasonable, especially if you have a secure, insured place to store it. If you have access to fractional gold, like small coins or small bars, and if you have a diversified financial plan that covers your more immediate needs. But for true resilience, again, look for preparedness supplies, food, water, medical, safety, energy. Those are the things that I tend to lean toward more heavily when we think about disaster scenarios. So you want to think about what's on your list. What should you focus on? A 30 to 60 day supply of food and water would be a great start. A home generator or even a solar charging system, backup fuel storage if it's safe and legal for you to store, prescription medications and first aid kits, flashlights, hygiene supplies, communication devices. For example, ham radios. I got my ham radio license recently for that purpose. So these kinds of assets don't just prepare you, they could be a resource to share with others. If your community is suffering based on disaster or some sort of disruption, you can be someone who can help others. You can share resources, you can barter, or you can just simply be a resource to share with others and help provide support for a community in need. So ultimately, should you invest in physical gold? Just like a lot of things in personal finance, the answer is maybe, or it depends. If you view it as a supplemental store of value and not your primary crisis plan, I think it could make sense. Physical gold can preserve wealth during long-term inflation or currency instability, but it's not really a great substitute for food, water, or other essential supplies when systems fail. Disasters like Hurricane Maria and Katrina showed us that the practical, usable goods that people need really drive the local economy and systems in times of crisis. So once recovery begins, gold might re-enter the equation in small doses, but it's not really the primary utility needed during those times. So keep that in mind if you're thinking about gold. Again, has a place, but think about true utility during disasters and what's really needed. All right, with that, thanks for joining me today as always. If you have questions, you know where to find me. At least I think you do. If not, I'll tell you. It's elevationfinancial.com. I'm pretty much everywhere on social media if you have a question, or you can send a message through my website, or if you want to talk one-on-one, just more real time, or you want to maybe think about becoming a client, feel free to book a free consultation on my website, and that's at elevationfinancial.com. All right, everyone. Thanks for joining me again. Have a great day. We'll see you next time.